Hi, I'm Conor Redmond, founder and Chief Actuary at BriteCo. Quick question, who actually pays for engagement ring insurance? Is it the person who bought the ring or the person who wears it? A lot of people get this wrong because paying for the ring, wearing the ring, and legally owning the ring are not always the same thing. In most states, an engagement ring is considered a conditional gift, meaning the legal ownership question may not be fully settled until the marriage actually happens. So let's break this down simply so your ring is protected the right way. Who actually pays for engagement ring insurance? The person who buys it or the person who receives it? The answer is actually either person can pay. There is no universal rule that says only the buyer or the recipient has to pay for the policy. But here's the important part. The insurance policy should be set up around the person with the proper insurable interest in the ring. And that depends on timing. Before the proposal, that's usually the person who purchased the ring. After the proposal, things can get more nuanced because in many states, the ring is treated as a conditional gift, tied to the marriage, except Montana. So the safest approach is not to assume ownership automatically transfers the moment the ring is accepted. Instead, make sure the policy accurately reflects the situation and the person who needs coverage. After the proposal, who should insure the engagement ring? This is where people often get tripped up. The person wearing the ring may have day-to-day possession of it, but in many states, an engagement ring is still considered a conditional gift until the wedding happens. That means if the engagement ends before marriage, the ring may legally need to be returned to the giver, depending on the state. So after the proposal, the couple should not assume the recipient is automatically the full legal owner. Instead, the key question is, who has the insurable interest and how should the policy be structured? In some cases, the person who bought the ring may keep the policy active. In other cases, the recipient may be added or listed appropriately. And sometimes a couple may decide together who pays while making sure the policy details are accurate. The big takeaway, payment does not equal ownership, and possession does not always equal ownership either. Insurance needs to match the real legal and practical situation. When do people actually insure an engagement ring? There are three common scenarios. First, before the proposal. The buyer gets coverage right away, which is smart because the ring can still be lost, stolen, or damaged before it's even given. Second, right after the proposal. Once the ring is being worn, the couple updates or sets up coverage so the ring is protected in real life wherever it goes. And number three, a shared approach. One person may pay for the policy while the policy is structured to reflect who has the proper insurable interest. All three can work. The key is making sure the ring is covered immediately and the policy information is accurate. What actually matters when it comes to engagement ring insurance? It's not just who pays. It comes down to three things. The person or people with the correct insurable interests are reflected on the policy. The ring is insured for the right value, and the policy covers real risk like loss, theft, damage, and mysterious disappearance. Most problems happen when couples make assumptions. They assume the buyer is covered forever. They assume the recipient automatically owns the ring. Or they assume homeowners insurance gives them complete coverage. Those assumptions can create issues if something happens and you need to file a claim. Here are three engagement ring insurance mistakes to avoid. First, waiting too long to insure it. If something happens before coverage starts, you're not protected. Second, listing the wrong person or leaving the policy unclear. Because engagement rings can be treated as conditional gifts in many states, the policy should reflect the real situation, not just who is wearing it. Third, assuming homeowners insurance covers everything. In many cases, homeowners coverage has limits, deductibles, and exclusions that may not fully protect an engagement ring. These mistakes are all avoidable if you set things up correctly from the start. If you want to do this the right way, here's a simple version. Insure the ring as soon as possible after purchase. Make sure that the policy reflects who has the proper insurable interests. Update the policy if the ring changes hands, the couple gets married, or the situation changes. And choose coverage built for real-life risks, like loss, theft, damage, and mysterious disappearance. Because the goal is simple. If something happens to the rain, you want the claim process to be as smooth as possible. At BriteCo, we make engagement rain insurance easy. With BriteCo Jewelry Insurance, your ring can be covered for loss, theft, damage, and mysterious disappearance with no deductibles. You can get a quote in about 60 seconds, completely online, and make sure your coverage is set up the right way from the start. And because ownership rules can vary by state, especially before the wedding, it is always worth checking the details instead of guessing. If you have questions, drop them in the comments below. We read every one. And if you want more straightforward jewelry insurance advice like this, make sure to subscribe.